first tick on the index is mildly in the green, up about 40 odd points on the Nifty.
The Nifty is up 56 points, 17,900 exactly at 11 a.m.
Absolutely flat for the markets right now, while Nifty is in the green, up around 10 points.
I mean, this is as flat as markets have been in some time, isn't it? Just like a traffic light blinking red and green, but not really giving us any clear direction at all.
The Nifty is not even up or down 0.1%, it's just 27 points, that's 0.05%. The Bank Nifty is also as flat as the other indices.
Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track about 6 hours of the day's trading action in 5 headlines. I'm Sonal Bhutra. Here are the headlines for the day. A range-bound session sees Indian indices fail to hold on to its early recovery and close with mild cuts. Mid-caps underperform while IT remains a major drag. Sources say that the NSE is in preliminary talks to extend trading hours for the derivatives market. Adani Cements reaches an arrangement with truckers in Himachal Pradesh to trim freight costs by 10 to 12%. The move paves the way for units of Ambuja, Cements and ACC in the state to resume operations. Genco is power ahead after the centre invokes emergency law to maximize power output ahead of an expected demand surge. Power units importing coal will now operate at full capacity for 3 months from the 15th of March. Surplus power will be sold to exchanges. Steel stocks shine as hopes of China announcing a stimulus package in March lifts steel prices to a 7-month high. Tata Steel and SAIL close 1% higher. Bharti Airtel hikes entry-level tariffs in Maharashtra and Kerala. Meanwhile, packaging company Uflex slips 2% after IT department conducts search operations in its Noida office. And here's the lineup of what we have in store for you today. It's a packed show. In Market Opinion, we have Mark Matthews of Bank Julius Baer and Company. And in the Corporate Voices, we have Rajneesh Kapoor, the COO at JK Cement. But as always, let's straight go to the day's trading action now. A range-bound session saw the market fail to hold on to gains. Nifty and Sensex ended flat with a slight negative bias. While banks fell in line with the blue chips, mid-caps underperformed. That index fell over 0.25%. Reliance lent support to the Nifty, while IT remained a major drag. BSE companies raised a market cap of close to 70,000 crore rupees in today's trading session. And meanwhile, we also learned from sources that the National Stock Exchange is in talks with market participants on extending trading hours for derivatives. However, sources added that there is no deadline or timeline by which this decision needs to be taken. Prashant Nair is here with the details. Prashant, not the first time this is being discussed.
Well, that's right. I mean, this is an issue which has come up over the last 10 plus years. Occasionally it does come up. It gets discussed, but so far nothing has happened. But there is fresh impetus, and that's the reason why we're reporting this. Now, we understand from sources that exchanges, mainly led by the National Stock Exchange, is in preliminary discussion with market participants, brokers, large, small, to discuss this very subject, which is extending trading hours. The segment for which the hours may be extended, which is under discussion, is the equity derivatives segment, Nifty Futures. Is what I'm talking about. Now, there is no deadline or timeline by which this has got to be done or this has to be rolled out. So this is a open-ended kind of thing at this point in time, more like getting feedback, discussing it, what's possible, etc. And I spoke to a variety of participants within the ecosystem, and there is widespread acknowledgement that before any decision is taken in terms of moving ahead or not, the tech, the back-end settlement, etc. needs to be in place. Only then you can move forward. Exchanges are also of the view that anything which happens will be gradual in nature, like for example what happened with the settlement process where we moved to T+1 over a period of more than a year. The view which has been expressed, and again this is not new, has been that the current hours lead to volumes moving offshore to SGX, etc., to the Singapore exchange. So why not bring that home, and extended hours perhaps will help with that. The other point which I think many traders would also perhaps agree with is, this allows longer hours, perhaps allows traders and investors to react in a faster way to any global developments which may actually take place. Where does the regulator stand here? SEBI has already sort of passed enabling provisions for this to happen. So technically exchanges have the powers to do this on their own. So in the cash segment, they can go up to 5 p.m. In the futures and options segment, they can go up to 11:55 p.m. As I said, all of this is the preliminary stage, and there is, as I said, no date or so by which this has to be done. Discussions are ongoing, and this is something which we will continue to report and bring to you going forward as well. Back to you.
Prashant, thank you so much for joining us with those important details. We'll keep coming back to you for more updates on that. But let's get you some expert opinion now. Mark Matthews of Bank Julius Baer and Company said that inflation still appears to be very much a 2023 story and that the US Federal Reserve is expected to be tenacious in raising rates. Listen in.
Inflation, we thought we'd put the inflation argument behind us and it was a 2022 story. Unfortunately, it's still very much a 2023 story because the U.S. economy is simply not behaving in the way that anybody thought it would. It's incredibly strong, and the retail sales for January proved that point. Particularly, I thought what was interesting was the huge increase in spending in bars and restaurants, up 25%. So Main Street America is really doing well. Totally contradicting all of those lead indicators that were telling us we're going into a recession. And therefore, people are thinking that inflation will remain high and the Federal Reserve will be tenacious in raising rates.
Okay, all right. Let's get some more opinion now. Vineet Sambre, head of equities as DSP Investment Manager, said that management commentaries during the earnings season has indicated that consumption has been sluggish. Listen into what he had to say.
Looking at the commentaries of the management, it is quite clear that the consumption has been a bit sluggish at the moment. And what most companies are sort of facing is heightened cost across the board. So while companies have done well as far as the overall sales growth might have concerned, but when we look at the profitability margins, there is a impact on the profitability. If we believe in the mean reversion theory, and as the world goes through a bit of recession, these commodities which are hurting the profitability should cool off a bit, and that should then again lead to expansion. So maybe 2 quarters we will have some pain, continuing, but after that we should see the profitability improve. We are actually looking at some of the data which helps the overall consumption demand, and we looked at the 9 months results for the corporate India, and we looked at the wage growth. So I think the wage growth for the 9 month has been 17%, which is a very robust number as such. And the other data point which we are also monitoring is the rural wage growth, which is also inching up. I think there will be pain for 1 or 2 quarters, but we are not taking a view to cut back on our consumption consumption stocks. But in fact, we are looking to add into this the next 1 or 2 quarters of slow growth environment where the valuations are actually becoming reasonable for few names.
Okay, all right. That's all the market opinion that we have for you today. But to the second headline now, Adani Cements has reached an arrangement with truckers in Himachal Pradesh to trim freight costs by 10 to 12%. The move has paved the way for units of Ambuja Cements and ACC in the state to resume operations. Nigel D'Souza is here with more details on this one. Nigel.
Well, that's right. Good news coming in for ACC as well as Ambuja Cements. After nearly around 2 months on, the operations have restarted in Himachal Pradesh. It was initially shut down in December 2022 because, in fact, there was a dispute with the truck operators out there on the back of freight rates. Now, Ambuja Cements as well as ACC, they wanted lower freight rates while the truck operators weren't moving. But now we understand that everything has been amicably resolved. The revised rates as well should come up for you on the screen, both on the 12-ton as well as on the 24-ton. The management says that this will basically reduce freight costs by close to around 10 to around 12% odd. And this is positive for ACC as well as Ambuja Cements because it constitutes nearly around 10% of their total volumes, which is good news, point number one. The second factor is these are EBITDA accretive units or profitable units. So it will be a bigger impact on the EBITDA front. In the interim, they would be moving some of that cement from other cement plants to the Himachal region. So this, in fact, will result in savings on that front as well. The bigger question is what happens to the industry? Now you have 2 large units that have got restarted. Will the recent price increases that have been pushed through, will they hold out? Well, in the next few days, we'll know on that front as well.
Thank you so much, Nigel, for joining us with those details. Sticking with the cement space now, Rajneesh Kapoor of JK Cement believes that cement price hikes in the north and south will not hit the demand and volume growth of cement industry. Listen into what he had to say.
Primarily, yes, there has been an attempt of price increase, and we can say that in North, we see about 10 rupees of price increase has been taken. But when we look at an average kind of a thing, by the time this month ends, I think we will be looking at about 7 odd rupees of price increase in North. That is, I'm talking per bag price increase. And in South, I think it is slightly more, maybe around 10 rupees price increase can be seen in South as the month averages out.
Moving on to the third headline now, India's coal production has reached a new milestone of 698 million tons till date in FY23. Coal production has already seen a 16% year-on-year rise. In addition, India's total coal imports surged close to 26% year-on-year to 192 million tons during April to December 2022, with non-coking coal driving the imports. With government's new directive to import coal-based power plants to operate at full capacity in the peak summer months to avoid power shortages, the coal import is set to see new levels. Vivek is standing by to tell us more on the government's order. Vivek, what does it mean?
Well, absolutely. So what's actually happened is that, the Ministry of Power has gone ahead and invoked Section 11 of the Electricity Act, which basically means that now they've gone ahead and given a mandate to power companies to import coal in case it is necessary, especially given the fact that they're anticipating a significantly higher demand in the coming months, especially given the fact that when you're talking about the summer season, the impact of the demand is something that causes a significant amount of requirement for coal supplies. So a similar move was taken last year, between May and December of 2022, and the key beneficiaries, of course, were Tata Power as well as Adani Power, given their power plants that they have at Mundra, where they actually go ahead and import coal from Indonesia. And now, talking about the impact of this particular move, a city has come out with a note on the entire electrical utility pack. What they're saying that this particular move will benefit imported coal-based power plants, and the imported coal-based power plants currently are unable to pass on the full fuel cost pass-through, which Section 11 allows. So plants currently operating at very low capacity, and especially what they're talking about is Tata Power's Mundra UMPP, where they say it will benefit significantly for the period under which Section 11 is in force. We spoke to other analysts as well. Analysts believe that this is quite positive as far as the entire power ecosystem is concerned, especially coal-fired power plants. Last time, when this particular development happened in the first quarter of FY23, the PLF, or the plant load factor for NTPC, improved from around 70% to a little over 80%. And merchant power plants too are likely to rise. So another beneficiary on anticipated higher demand is going to be IEX as well.
That's an important update, but Vivek, stay with us. The Adani Group stocks eroded a market cap of close to 20,000 crore rupees just today. The fall in the market cap since the Hindenburg report now stands at over 11 lakh crore rupees. The market capitalization of Adani Total has eroded by more than 3 lakh crore rupees alone to slip below the 1 lakh crore rupee as things stand. And 6 out of the 10 group firms ended the day in the red, with Adani Total, Adani Green and Adani Transmission hitting lower circuit. Tell us more details. Take us through how the stocks have been performing.
Well, we are analyzing the price action as far as the Adani Group stocks are concerned, and it's quite clear, the kind of severe price impact that, that particular news flow has had as far as the group stocks are concerned. However, a few of the group stocks have managed to recover from the recent lows and are trading 20% above in some cases from the recent lows that they have hit. When you're talking about the individual stocks, Adani Total Gas has been the stock that's taken it or has had the hardest impact in terms of the prices, down almost 75% from the peak. When you're talking about Adani Enterprises, down over 50% and continues to trade at the recent lows that the stock was trading at. When you're talking about Adani Green Energy, down 70%, and there has been no recovery in sight for this particular name. Adani Transmission, similar story, almost down 70%. And continues to trade at the recent lows. Now coming to Adani Ports, interesting situation here. The stock was down almost 23% from the recent peak. However, the stock has managed to recover almost 25% from the recent lows that the stock saw. Adani Power around 38% fall since January 24th. However, from the recent lows, it's gone up by almost 22%. When you're talking about Ambuja Cements, down almost 30% from the recent highs or January 24th highs, but the stock has managed to recover around 6%. NDTV as well as ACC continue to see sharp correction. Both of these stocks are down between 20 to 25%. Now some interesting data points coming in some of the cash stocks. Adani Total Gas, now this particular stock has hit the lower circuit for 18 straight sessions, and it's interesting to keep in mind that the circuit limit for these particular stocks has actually been revised from 20% first to 10% and then to 5%. When you're talking about Adani Transmission, the stock hit the lower circuit, again for 13 sessions. Only on one particular day, the stock managed to close with the upper circuit limit of 5%. However, the circuit limit over here too was changed from 20 first to 10 and then to 5. Lastly, Adani Green, this particular stock has hit the lower circuit for 13 sessions. And when you're talking about February 17th, closed with minor gains of 2%. And the circuit limit here too has seen multiple changes from 20 to 10 to 5. So clearly the price erosion has been quite severe, but select stocks have managed to bounce back quite sharply from the recent lows.
Oh yes, big fall on a group level. Thank you, Vivek, for all those details. It's time for a break now. Stay tuned. We'll be back in a bit with the other headlines. Welcome back. You're still with us on Markets Today. Let's go to the rest of the headlines that we are tracking for you. To the fourth headline now, steel stock showed today as hopes of China announcing a stimulus package in March lifted steel prices to a 7-month high. Manisha Gupta is here with a wrap of all the action from this space. Manisha.
It has been a good day for metals and more so for ferrous metals rather than non-ferrous metals. So steel and iron ore should be on your radar because we've seen prices continue to gain onto this one. A couple of generic factors. One, you have the US dollar index, which now seems to be stabilizing. Two, the China National People Congress in month of March may give out further stimulus measures is what market believes, and that is showing in prices already. And then China new home sales gained for a third straight week in major 16 cities, and that clearly has led to markets believing that you will see construction infrastructure demand also come in for these metals. Steel to begin with is trading at a 7-month highs, and the trade data in China shows that arc furnace and blast furnace, both of these production numbers have continued to increase. Iron ore prices on the other side have seen a 60% gain from October lows, and we have seen markets see lower inventories. If you look at the onshore inventories, they are down by nearly 30% on an year-on-year basis and the lowest since 2016. So as the demand starts to pick up and the inventory is not so, you are looking at support in prices. And then there is a Goldman Sachs report which says that the iron ore prices in the next quarter will also increase. They're looking at a number of $150 per ton, and then they see the prices continue to decline for the third quarter, fourth quarter, and by the first quarter of 2024, they're expecting iron ore prices to fall below $100 a ton as well. But for the near term, there is still more bullishness remaining here. A report from Macquarie also says that steel mills are lifting iron ore on spot markets, and that has been supportive. If you look at the last 1 week itself, we've seen steel and iron ore prices gain anywhere between 5 to 6%. So a straight day, strong day continuing here.
Oh, it did, and we could see that in the stocks as well. But moving on to the fifth headline now, Bharti Airtel has hiked entry-level tariffs in Maharashtra and Kerala. With this, Airtel has now hiked tariffs in 19 out of 22 circles. Remember, entry-level tariffs have jumped 350% in just 3 years. However, brokers say these hikes will hit revenues by less than 2%, as lower-end subscribers constitute only 15% of the total subscribers base. Reema Tendulkar is here with more on the price cap and the impact.
Thanks so much for that. So as you pointed out, Bharti Airtel has gone ahead and raised the entry level, the minimum recharge plan in 2 circles, Maharashtra and Kerala. Earlier, it would cost you 99 rupees to go ahead and recharge your plan at the very least. Now it's going to cost you 155. So this is a big increase of 56%. With this latest tariff hike, Bharti Airtel has rolled out an increase in the minimum recharge plan or the entry-level plan in 19 out of the 22 circles. So a substantial portion, pretty much pan-India. That said, although it's a very sharp increase of 56%, right, 99 to 155, the revenue impact is not going to be very significant. According to IIFL, and this is from an earlier note, the revenue impact benefit will be less than 2%. Morgan Stanley estimates it to be at 1.3 to 1.5%. The reason is lower end subscribers don't necessarily top up every month. 2, you could lose some subscribers to competition. Remember, Vodafone Idea has not gone ahead and raised their prices. Their entry level still stands at about 99, 9800 rupees. So some, people who are getting pinched by this increase in tariff hike may go ahead and switch to competition. So on the whole, the revenue impact is not going to be very significant, less than 2%, but it's a step in the right direction. The bigger, trigger for telecom companies in Bharti is going to be a 4G tariff hike or a postpaid tariff hike. Another point to note is that entry-level tariffs have actually gone up very substantially in the last 3.5 years. 3.5 years back, the cheapest plan was 35 rupees. Now the number stands at 155 rupees. That's a sharp increase of 340%. In comparison, the other price plans have not seen such an increase, and one of the reasons could be that Reliance Jio is not present in 2G, so Bharti Airtel has less fear of competition.
All right, that's on Bharti Airtel. Thank you so much, Reema, for those details. Moving on, packaging company Uflex was down over 2% in trade after IT department conducted search operation in its Noida office. Timsi Jaipuria is standing by with all those important details. Timsi.
Well, as we speak, the search operations are underway at Uflex facility here in Noida. An IT department alleges that their internal investigation has indicated that Uflex has been concealing income by issuing bogus invoices, bogus bills. And that is what they are there at their Noida office to search for. Remember, this is a search operation, and as we speak, it is still underway. What kind of evidences they get is something that we'll have to wait and watch till the search ends. And not to forget, very clearly, there are clear evidences. That is why they went ahead with a search and not with a survey, because they feel that they have the entire trail. They just want a formal communication, a formal evidence from Uflex facility. Let's see what they are able to find out at the end of the search. Back to you.
Thank you, Rimsi, for all those details. And with that, it's a wrap on this edition of Markets Today. Thank you for watching.